Hi, I'm Auditor General Eugene D. Pasquale. Since Ben Franklin encouraged the formation of the Union Fire Company in Philadelphia in December 1736, volunteer fire departments have provided much-needed fire protection and life-saving services to communities across our great Commonwealth. I thank each of you for your selfless service. At the Department of the Auditor General, we assist volunteer firefighters through the annual distribution of the Foreign Fire Insurance Tax Premium. These funds are allocated through local municipalities to nearly 2,000 volunteer firefighters relief associations in Pennsylvania. In 2014 alone, state aid distributed to these relief associations totaled more than $68 million. The money provides numerous benefits to you and your families. It also encourages other individuals to volunteer in fire and emergency services at a time when we really need more people involved. Funds are also used to pay the expenses of training emergency service personnel and to purchase equipment to protect them during their hazardous duties. At the Department of the Auditor General, we are trained in professional accounting and auditing standards. We also have considerable experience auditing financial records typical to small volunteer service organizations like VFRAs. Through this video, we hope to share that knowledge and experience with you to help you administer your VFRA funds. This video includes information on applicable laws and their criteria, as well as a description of customary best practices over financial record keeping. We'll cover such things as protecting VFRA assets, investing, borrowing, authorized and unauthorized expenditures, and maintaining journals and ledgers, among other things. I hope you find this video helpful. I thank you again for your service to your community. Ben Franklin would be proud.
Hi, my name is Jay, and Ashley and I will be going over the management guidelines for volunteer fire company relief associations. First, we'll take a look at the course overview. There's an intro, Act 118 of 2010, State Aid Allocation, Act 205 of 1984, Financial Record Keeping, Inherent Risks of Relief Association, Preparation for Relief Association Officer Changes, Authorized and Unauthorized Relief Association Expenditures, Commonly Issued Findings, Websites of Interest, and Closing. Since volunteer firefighters' relief associations receive public tax monies, the association officers have a responsibility to the public to conduct the association's financial affairs in a business-like manner, keeping financial records which provide a documented audit trail and can easily verify the propriety of all association transactions. The Auditor General has the power and duty to audit accounts and records of all volunteer firefighters' relief associations as far as necessary to verify that the monies received was and is being expended for no purpose other than authorized by Act 118 of 2010. The Relief Association and the fire companies are two separate legal entities. The Volunteer Firefighters Relief Association records may not be incorporated with those of the fire company. Relief Association funds should be maintained in separate Relief Association accounts, and investments purchased should be issued solely in the name of the Relief Association. Prudent business practices dictate that the Relief Association maintains separate accounts from the fire company to avoid commingling of funds. In addition, all bank statements, financial records, invoices, and any other documents should be kept separate from their affiliated fire company. Relief Association officials are responsible for ensuring that their association operates in accordance with Act 118 of 2010, which governs the operation of volunteer firefighters' relief associations. Section 7415 of Act 118 requires that the Relief Association bylaws set forth the specific operating procedures of the association.
Allocation of foreign fire insurance taxes, state aid. State aid allocation. The Foreign Fire Insurance Tax Distribution Law was passed as part of Act 205 of 1984, the Municipal Pension Plan Funding Standard and Recovery Act, commonly referred to as Act 205. The Commonwealth allocation of state aid to municipalities is determined by a formula based on the population and the market value of real estate for each municipality. Within 60 days of receipt of the check, each municipality is required to redistribute the state aid allocation to the VFRAs serving the municipality. It is the Relief Association's responsibility to monitor the receipt of the state aid. If the Relief Association has not received its state aid check from the municipality by December 1st, the Relief Association officers should contact the municipality to expedite the distribution of the funds due to the association. Finally, state aid checks disbursed by the municipality must be payable to VFRA.
Financial record keeping. Prudent business practices dictate that volunteer firefighter relief associations maintain their records in an orderly and businesslike manner. This includes maintaining a chart of accounts, journals, ledgers, and investment roster, an equipment roster, and a membership roster. Records are to be made available to the department auditors upon request. Prudent business practices dictate that every VFRA should provide maintenance of such books of accounts as may be necessary and appropriate to afford a permanent record of its fiscal affairs.
What is a journal? In accounting, a journal refers to a financial record kept in the form of a book, spreadsheet, or accounting software that contains all financial transactions. Transactions should be recorded and presented in the journal in chronological order. These transactions are then assigned to a ledger using a chart of accounts. Please refer to the Management Guidelines Handbook for more information on chart of accounts. What is a ledger? A ledger summarizes financial information that is classified to a specific account number using a chart of accounts. A ledger can be a physical book, spreadsheet, or accounting software where the financial information is recorded. Financial information for ledgers is taken from the journal. Checks. Prudent business practices dictate that the VFRA should consider writing checks directly to vendors rather than reimbursing the fire company or an individual for expenditures. 2 signatures of VFRA officers, one being the dispersing officer, must be present on all Relief Association checks and other negotiable instruments. Prudent business practices also dictate that the VFRAs should not write checks to cash or permit transfers from the VFRA to the fire company accounts. VFRA may elect to use online banking or bill payer services. The following best business practices should occur if using online or bill payer services. 2 officers, one being the dispersing officer, must be involved in the process. 1 officer will make the online payments, while the other officer will perform the monthly reconciliation of the bank statements. Statements should be reconciled timely, and the reconciling officer should initial and date the statements upon reconciliation. Instead of 2 signatures on the checks as required by Act 118, the compensating control will be 2 officer signatures on the applicable invoice. Approval of the payment should be included in the minutes of the meeting. Refer to the Management Guidelines Handbook for further guidance. Prudent business practices dictate that financial records presenting the financial activity of the association be prepared on at least an annual basis. Prudent business practices also dictate that at a minimum, in order to help document receipts and disbursements, each relief association annually prepares an accurate record of receipts and disbursements, documenting a summary of the relief association's receipts and disbursements for the year and the effect of those transactions on the entity's account balances. Prudent business practice dictates that relief association bank accounts are reconciled each month. Typically, the treasurer performs this reconciliation. However, requiring an individual other than the treasurer to reconcile the accounts would provide additional safeguards over the Relief Association assets. At the very minimum, the treasurer should provide a copy of the bank statements along with the monthly reconciliation of the accounts at the regular meeting.
Prudent business practices dictate that Relief Association officials are responsible for the management of association assets. The prudent investment of association monies is a primary element of this responsibility. The purchase of securities by relief associations is governed by statutory legislation commonly known as the Fiduciaries Investment Act. Prudent business practices dictate that relief associations should maintain a complete and accurate roster of equipment owned by the relief association, which includes the following: types of equipment purchased, dates of purchase, unit costs, names of suppliers, serial numbers if applicable, current locations of items, final dispositions of sold or damaged equipment, evidence of performance, and results of an annual physical inventory. To qualify for Relief Association membership, an individual should currently or previously have participated in the fire service. A social member of the fire company does not qualify for Relief Association membership. Extending any type of benefits to individuals who do not participate in the fire service as defined by Act 118 is considered unauthorized. Social Security numbers should not be included on the membership roster. Act 118 at Section 7412 defines fire service as the service of organized groups of individuals, not only in training for and in active duty in the protection of the public against fire, but also in the training for and the performance of such other activities as are commonly undertaken by fire companies and their affiliated organizations. For a specific definition on fire service, please refer to our Management Guidelines Handbook on the Auditor General's website. Inherent risks affiliated with VFRA. In a financial audit, inherent risk measures the auditor's assessment of the likelihood that there are material misstatements due to error or fraud in segments before considering the effectiveness of the internal control. If the auditor concludes that a high likelihood exists, the auditor will conclude that inherent risk is high. Inherent risks affiliated with relief associations. Relief associations are volunteer organizations. Domination of relief association management by a single person or small group, lack of segregation of duties, such as a person handling the duties of both secretary and treasurer, lack of oversight or monitoring of financial transactions, and the level of trust due to friendship-family relations among members and officers. Frequent turnover of relief association officers, canceled image checks unavailable for review, documentation is not sufficient to verify the propriety of the expenditure, and disbursements are not pre-approved by the membership due to a lack of meetings, infrequent meetings, or lack of minutes in meetings. Due to these inherent risks, it's imperative that the Relief Association properly design and implement internal controls to protect the association assets from fraud, waste, abuse, and possible misappropriation. The lack of or weak internal controls is the cause of many audit findings. For further guidance, please refer to the Management Guidelines Handbook.
Act 84 of 1968 was the original legislation which established volunteer firefighters' relief associations. Act 118 of 2010 supersedes Act 84 of 1968. However, Act 84 provisions were included in Act 118. Therefore, if the VFRA bylaws or charter includes references to Act 84 of 1968, no changes to the bylaws are required. Act 118, Section 7415 dictates that the Relief Association must be established by a charter or constitution. Bylaws must outline the VFRA's purpose, form, structure, and benefits. Bylaws must also meet the minimum requirements set forth by Act 118. Bylaws should specifically authorize any discretionary benefits which the membership has deemed payable with Relief Association funds. Prudent business practices dictate that the Relief Association should maintain minutes of all Relief Association meetings. Minutes are the official record of VFRA proceedings and provides legal proof of the official actions. All Relief Association meetings should be held separately from the fire company's meetings. The minutes of the Relief Association meetings should be recorded separately from the minutes of the fire company's meetings and maintained as a permanent record of the association. The minutes should be legible and should adequately document the authorization of the expenditure of funds, approval of the association investments, and all other business conducted at the meetings. The minutes should be legible and should adequately document the authorization of the expenditure of funds, approval of the association's investments, and all other business conducted at the meetings should be signed and dated by the secretary. Surety, or fidelity bond, ensures VFRA against the loss of a result of theft by a designated officer. Disbursing officer must be bonded, and the bond must be at least as great as the maximum amount of cash assets held by the VFRA. The Relief Association should monitor their cash balances to ensure their bond coverage is adequate at all times. In order to prevent duplicate payments of invoices for all payments should be maintained to support authorization to expend funds. Invoices should be marked paid and include check number and date of payment. Signatory authority. The signatures of at least two officers, one being the disbursing officer, are required for all financial transactions. This includes, but is not limited to, checks, investments, loans, and transfer of funds. Pre-signing of blank checks. Relief Association officers who are authorized and required to sign checks should never pre-sign blank checks. Pre-signing a blank check may seem harmless and is an easy way to circumvent the two-signature requirement, but the risk of pre-signing a blank check isn't worth it.
Commingling of funds. VFRA and fire companies are separate legal entities and should maintain separate financial accounts. Commingling causes confusion in financial record keeping and reporting. It also lends to a greater chance of financial errors to occur and improper accounting for tax purposes. Additionally, when we come to perform your audit, if the fire company records are commingled with the VFRA's, the audit will inevitably take longer. A volunteer firefighters relief association may dissolve and or merge for a variety of reasons. When a VFRA decides to dissolve or merge, the dissolution and or merger should be approved by the membership and the approval documented in the meeting minutes. Dissolving or merging VFRAs should contact the Department of the Auditor General, who may schedule an audit for dissolving and/or merging VFRA. Assets of the dissolving and/or merging VFRA, cash investments and equipment, should be transferred to another VFRA, not a fire company or other entity. When cash, investments, and equipment assets are transferred, the transfer should be documented by both parties and equipment added to the recipient VFRA equipment roster. For additional information regarding dissolution and mergers of relief associations, please refer to the Management Guidelines Handbook. Here's an example of an agreement for the donation of equipment. This form can be used for dissolutions and mergers of relief associations. Legal counsel regarding dissolutions and mergers. Prudent business practices dictate that associations who are dissolving or merging should consider retaining legal counsel to provide assurance that the dissolution complies with applicable laws and regulations, and all benefits owed to active or former members are maintained and protected.
Preparation for Relief Association officer changes. Prudent business practices dictate the following: changing authorized names on financial accounts. For example, bank accounts, mutual funds, brokerage, and trust accounts. Ensure that all respective documents are turned over to the new association officers. This includes, but is not limited to, the following: bank and investment statements, canceled or imaged checks, journals, ledgers, equipment roster, membership roster, investment roster, invoices and receipts, and minutes of meetings. Provide our Bureau with names, addresses, phone numbers, and email addresses of new officers. Authorized and unauthorized Relief Association expenditures. As a post-audit function, the Department of the Auditor General is prohibited from providing pre-audit advice. Therefore, for all inquiries related to the allowable use of state aid, please refer to the Department of Community and Economic Development website or call 1-888-223-6837. Loans to the fire company. In order to provide adequate protection of this type of investment, the fire company and Relief Association must enter into a formal written loan agreement. The loan agreement must include collateral equal to at least 150% of the amount of the loan, a reasonable amortization schedule, and a reasonable rate of interest, a minimum of 3%. Lease purchase agreement. Prudent business practices dictate that lease purchase agreements should be issued in the name of the VFRA and should include the following at a minimum: equipment items being leased or purchased, principal cost of the equipment items, total repayment amount financed, the principal and interest rate being charged, payment schedule and length of agreement, penalty for late payment, and provisions if premature termination of the agreement occurs. Training expenses. VFRA may pay reasonable tuition and related expenses for members to attend training. For more information regarding training expenses, please refer to the Department of Community and Economic Development website or call 1-888-223-6837.
For more information, you may go to the Governor's Center for Local Government Services. Top 10 most common audit findings. Number 1, undocumented expenses. 2, failure to maintain a complete and accurate equipment roster. 3, unauthorized expenditures. 4, untimely deposit of state aid. 5, inadequate minutes of meetings. 6, insufficient surety, fidelity bond coverage. 7, inadequate Relief Association bylaws. 8, failure to maintain a complete and accurate membership roster. 9, inadequate financial record-keeping system. And number 10, inadequate signatory authority for disbursement of funds. For copies of VFRA audit reports, please refer to the Department of Auditor General's website or call our department at 1-800-922-8477. To view VFRA forms and publications, refer to the Department of the Auditor General's website, www.paauditor.gov. Please be advised, the Department of the Auditor General is going green. Therefore, we encourage you to provide us with appropriate contact information for all VFRA officers, including all valid email addresses.
Auditor General Eugene DePasquale salutes Pennsylvania's volunteer firefighters. Thank you for your time and service.